Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME. And so here I am recording this on Wednesday, October 2nd, after GameStop closed at a price of $21.49, being down a little over 2% on the day and continuing down about 4 cents in the after hours. And so, yeah, I wanted to follow up on GameStop for a number of reasons. And I would say the main reason is because I did put out a poll on the channel that I will, do the follow up on Tilray, which I already did, going over some unusual whales data. And so, that is posted, and that might also inform on some of this video because I will touch on some unusual whales data on GameStop. And so, yeah, I put this out earlier today, about 8 hours ago when I was at work, because these are four tickers that I'm interested to cover. I just don't have that much time because I'm at work. And the one that got voted the most was GameStop with 2 votes, whereas SoundHound or Sound, only got 1 vote. And so, while I will not be able to do another video on here today, I will be able to do one tomorrow after I do another follow up on Tilray. So, go to the channel, post your vote, and also give this a thumbs up if you do enjoy it, and I will cover whichever ticker. Chewy, a lot of interesting stuff there, as well as Rivian, including some options data from unusual whales, and SoundHound. I did go over that on Sunday. Would like to follow up on it. So yeah, make sure you vote. I'll follow up with the poll tomorrow and do another video. But for this one, like I said, I am going to be going over GameStop. And so the thing that really stands out to me is there was a lot of bullish sentiment as far as calls go. I think that there was one that, a big chunk of one was sold yesterday, I believe, which I saw posted on X, and that has an expiration of I believe January for the monthly contracts, and that was a strike of $35 a share. So, maybe there's going to be a little bit of a pullback, but I do think overall that the sentiment is that this is going to be going up. And if we do look at the price action here over the past few days, starting on the 30th on Monday, we did get a wick up to a high of $23.64, which crossed two levels to be paying attention to. One is $23.41, which is Roaring Kitty's average, unless he's added to his position, but he has not updated his YOLO position on Reddit, so I assume it's still $23.41. And that wick high also got up to, let's see, this uptrending orange line that I have here. So it seems like kind of a confluence of levels of resistance. Maybe this is just a psychological one at 23.41. But yeah, getting up to that high of 23.64, we got rejected from, these levels that are, good to be paying attention to. Following that, we did pull back, coming down from Monday's close about 6% to today's close, a little over 6%, so not that massive. And so, here there are a few things that stand out to me. One is that we are trading below this white line here, which is 2169. I've talked about that level a number of times because it is a 786 Fibonacci retracement level, which I'll go over in just a minute. I do got to take a step back to show that though, so I will come back to it. Other levels that stand out to me, really, just coming down to around $20 a share. We do have this low here from August 28th of 1988. And then from this retracement here, we have 1967 being the 786. $20 a share, that being a psychological level, because we think in $20 bills, and then also this purple uptrend. So that confluence of levels, I could see price, unfortunately, dipping down to $20 a share, but I do think that would be a good dip buying opportunity, as that has served as support multiple times. I think it would be serving as support again, but of course, as we do test this level multiple times, the more times we test it, the weaker it gets. And a word of caution, I suppose, could be that, while it's ugly and I don't really think it's valid, maybe there is a head and shoulders pattern here. But like I said, I think it's ugly. I don't think it's valid. So I am not worried about that. I think $20 will be acting as support if we don't see support being held now right around 2169. Other things, while I am zoomed in on the chart here, we do have the MACD that has been green or positive. Does look like it could be flipping to red or negative when we could be seeing a pullback, and that could be coinciding with some dip buying opportunities down to around $20 or maybe a little bit lower per share, so maybe look for that. The RSI does look like it's around neutral at 47.37, so maybe we start to see this pull back a little bit more, as that does seem to be the direction of it if price does pull back more. But maybe we do see a reversal in that. It does start to go up because, as prices come down a little bit, we don't really see volume backing that. There isn't a lot of, selling, people just overturning the stock as it's coming down. So I do think that, there is some hope that we could be holding 2169. But anyways, I'm going to take a step back so we can go over some of these levels. And so here, this orange uptrend that we did get rejected from, that is based on one pivot point being the low from April 23rd, which was at a price of $10.01. And then the other pivot low being from August 5th, when the markets gapped down and we closed higher. That was a low of $18.73. So that, might be a level you guys remember. The August 5th was a pretty notable day in the markets. And then the other uptrend that I have is that purple one that is based on the low from May 24th before we started to go back up here. That was at a price of $17.70. And then the other pivot point was also that low from August 5th. And, that 786 that I was talking about being 2169. So that 786 is based on this retracement going from the low of $9.95 up to the market hours high of $64.83. That was hit on May 14th. So that is how I get those levels. And I have talked about this, I believe, in an AMC video, but I did relate it to GameStop, and that is these two gaps here. I feel like from a psychological perspective, we have this blue dashed gap down here, which is at a price of $17.46, has not yet been filled. And then we have this gap to the upside at $48.75 that has also not been filled. And I feel like, kind of from a psychological standpoint, you could think of this gap as maybe there are some people that see that gap and they're waiting for it to be filled. So they're saying, I'm not buying any more GameStop until it hits $17.46, maybe $17.50. Wait until that gap gets filled before adding back in. And so what I could see happening is price maybe going towards that level, but not getting all the way there. So people who are patiently waiting for that gap to be filled get left behind as the stock rips higher, blowing past 48.75. And then when that gap is filled, those people who are patiently waiting recognize, hey, I don't want to be left behind. I am going to FOMO in. And so I think that could trigger it to go even higher. And so I feel like that's kind of this range that we're trading in between 17.46 up to 48.75. Whichever gap does not get filled first, I think we're going to be going in the opposite direction. And I think that gap that we will not be filling is 17.46. And I think that will trigger moves to the upside that will trigger, FOMO and the squeeze and beyond, getting into the triple digits. Maybe this year, maybe not, maybe next year, who knows? But, basically, I think that, around 2169, that level has been a notable one for me personally, just because, 69 is a fun number. But I think that if this does pull back to $20 a share, I think that we're going to be seeing a lot of support there, as it has been holding up since the second pivot point here from August 5th. We also have this other pivot point from September 11th. And then, testing it over here before. Let's see, almost 12% move on September 20th. So looking pretty good there, especially with this big volume behind it. And so I think that, we're just seeing a little bit of a fade, but I think that it will be going higher. So I wouldn't worry too much about that. But I did want to go over some options data, or really, just unusual whales data here. Apparently, I'm still learning unusual whales, but apparently an insider sold about, almost 2,000 shares today. So maybe that's a little bit bearish. And this here, what I'm looking at is the past 7 days of options volume. What you can see here, what stands out to me is the majority of it is green. We've got about 1 million calls traded with a premium of $95 million, whereas the put volume is less than 200,000 relative, and that is then here as $17 million in premium. So a lot more calls traded, a lot more money being traded there. For today, it does look like there was a net premium decrease of about almost $2 million. And the premium traded today about $9.5 million with a volume of 120,000. And so overall, if I do scroll up, we can see that the breakdown for the contracts traded 51% bearish, whereas the remainder being either a little bit neutral or bullish. But I wouldn't be too phased by that. And the thing for me, this is looking at the volume. If I do switch over to net premium, you might see some charts like this being posted on X. Typically, I see them on the daily time scale. This is over the course of the past 7 days. The thing that stands out to me about this is, we did see, price being, which is in yellow, price being kind of flat over here with a spike up, and then we really see the call premium taking off. That's the green lines. But as the price has been declining over the past few trading days, the thing that stands out to me, while the call premium has been coming down, quite notably over the past few days, the put premium has more or less been flat. So that makes me think, people are taking some risk off the table as far as calls, but as far as puts, people are not necessarily going super bearish. So overall, I think that we're just seeing a little bit of a lull. And I think that we will be making some moves to the upside. Maybe we retest $20 a share. I think it's going to be good to look at these levels, see how it holds up at 20. If we start to close at lower closes, closing below prior day's lows, I think that could be, not so great. Maybe a line in the sand that might be useful to reference. Let's see, what was the close from the 11th of September? That was at a price of 1931. The low on that day, let's see, was 1931. So that line that I have drawn right there, maybe that's a good one to keep in mind. If we close below 1931, I think that would suggest that further downside. But if we get a wick below and a close above, we could be just testing these levels as support, faking out some people with weak hands, and then we start to move higher. So I think that overall, I think that the stock price is probably going higher to test 48.75 and likely break through it. But there is some downside risk, and I think $20 a share, if we even get to there, is going to be a nice dip buying level before some moves to the upside. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and make sure you vote in that poll for tomorrow's video. Take care, you guys.